Good morning, everybody. It's Wednesday, August 21st, 5:26 a.m. Central Time. Grain markets are mostly higher this morning. December corn futures up 1.5 at 399.5. November soybeans up 5.25 at 981.25. December Chicago wheat down a quarter cent at 556.25. December Kansas City wheat up 1 at 562.25. December spring wheat is up 2.75 at 609.25. Let's start off with the crop tour and day two.
ProFarmer released crop tour findings from Indiana yesterday. The state's corn yield was pegged at 187.5 bushels per acre, up from last year's tour estimate of 180.9 bushels per acre. USDA recently projected that the state's corn yield would rise to a record of 207 bushels per acre, compared to 203 bushels per acre last year. Indiana's soybean pod counts were huge at 1,409 per 3x3 plot, up 8% from last year. USDA projects a record soybean yield of 62 bushels per acre for the state.
I think the two are largely confirming that Indiana's crops are very, very good. When you compare USDA versus ProFarmer, yeah, USDA is way higher. I think, again, you've got to look at the year-over-year changes. The tour says Indiana's corn yield is going to be up 7 bushels ballpark. USDA says it's going to only be up 4. So maybe actually better potential than what USDA is telling us. Depends on how you want to read the numbers. But I think loosely speaking, yeah, the government says we're going to have big crops out of Indiana. And I think ProFarmer largely confirming that. What about Nebraska?
So the state's corn yield was pegged at 173.3 bushels per acre, up from last year's tour estimate of 167.2 bushels per acre. USDA recently projected that the state's corn yield would rise to a record 194 bushels per acre, up from 182 bushels per acre last year. Nebraska's soybean pod counts were strong at 1,172 per 3x3 plot, up 1% from last year. USDA recently projected that Nebraska's soybean yield would rise by nearly 15% to 59 bushels per acre.
So you got this big difference between like USDA and ProFarmer, and ProFarmer will fully admit that their Nebraska numbers are always way below USDA. I think this has to do with irrigation and the type of fields that they actually look at. But in any case, I mean, I think the tour says Nebraska corn is going to be up 6 bushels year over year. USDA says 12. So is that a problem? Maybe. I don't know. The market doesn't seem to be excited. We're trading close to unchanged and everything this morning. Pretty good pod counts, yield potential there. USDA's got a pretty big year-over-year increase for soybeans penciled in. So I don't know. Maybe you could make an argument that Nebraska isn't as good as what the government has led us to believe. But there are some things to be aware of in Nebraska. I think specifically that irrigation factor. Today, the tour will get into western Iowa and then also the kind of western Illinois and far eastern Iowa. I think you should see some pretty good crops in these areas. That northern part of Iowa that they're going to get into, they may find some issues related to those heavy rains earlier in the year. So that is what we will see results from later tonight.
Cattle futures continued to erode yesterday. The sell-off continued last week after Vice President Harris announced plans to tackle price gouging that could negatively impact the beef market and cattle industry. CME cattle futures made new lows for the move in every contract month on Tuesday. From a fundamental perspective, the sell-off can't be explained considering the historically low beef cow numbers. The USDA will release its monthly cattle on feed report this Friday. Cattle on feed as of August 1st are estimated to be unchanged from last year. July placements are expected to be up 3.2% compared to last year, and marketings in July are projected to rise by 8.1%.
I've been told that the most friendly cattle on feed reports are yet to come. Do you believe that to be true?
That's what I've been told also, but when I don't know. You would think they would have to come because the cattle they aren't out there. But we continue to have the same amount of cattle on feed right now as we did last year. I don't understand how that's possible. So yeah, I would like to think they're ahead, but who knows at this point.
People are saying that the price gouging plan from Harris is part of this. And I can buy that. So I know a lot of people have a lot of bad things to say about the Packers. Is that who they're going to go after if they go after anybody?
Yeah, that's who the Harris campaign plans to go after. That's what I took from their proposal, which I'm not saying the Packers are straightforward. There's no doubt about that, but we aren't in that situation anymore. You were just going to cause problems by this whole situation, by this proposal, and it's going to come back to the cattle producers in the end. And it's going to be rough. And of course, I can understand why the market would react this way.
Yeah, the market is the market reacts and then asks questions later is kind of how things work. So we talked about this last week, and you guys are way too sensitive. If I say one thing bad about either party, it's like I punched your mother in church and you'll like lose your goddamn mind over it. The fact of the matter is this: we have inflation. The CPI, total basket of goods and services, is up 21% since pre-COVID levels. Grocery prices 27% higher than in 2019. So what's the reason for that? Is it price gouging, or is it the fact that we shut down the entire world because of COVID, disrupted all the supply chains, and then printed trillions and trillions and trillions and trillions of dollars in the name of COVID, in the name of inflation reduction, all sorts of stuff? Price gouging isn't the problem here, but I understand the political tactic in saying, hey, we're going to fix this. We got to make some sort of effort to fix this, right? I just don't know that this is the way to go about it. And make no mistake about this: both parties are equally guilty when it comes to inflation. The money printing and the shutdowns began under Trump. They continued under Biden. Both parties are responsible. Our government is responsible. I think the media in this country, they try to pit us against each other. It's American versus American. You got to hate the other side. When in reality, it should be we all should hate the government for what they did to us during COVID and post-COVID with regard to shutdowns and money printing and all of that stuff, because that's what's responsible for the inflation. So no, both parties are responsible. I don't like any politicians. They're all full of shit. So it's not, this isn't me saying that Harris is bad or Trump is good or vice versa. This is me telling you that the whole government's responsible for this, and we should be upset.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
My friend Lewis Stearns, who's a crop scout, covers the entire Midwest, came on and talked about crop potential, had some photos and some ideas to give us with regard to some of the problems that are out there still potentially. I know we've been told we're going to have big yields, and we are, but there are some issues. Also talked about fertility. And if you're going to skimp on fertilizer, there's a right way to do it and a wrong way to do it. And this was the biggest take home for me, because I am not a farmer and I'm not an agronomist. So this is stuff that I could never do on my own. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes our 6 most recent premium videos, along with a whole bunch of other stuff. Also includes my cash grain marketing recommendations, everything that I've advised broken down by crop year, and percentage. Check that deal out today, guys.
Unfavorable weather could impact Russia's wheat crop. Late spring frosts, dry conditions, and flooding have caused some regions to suffer substantial crop losses. The country's ag ministry has maintained its forecast of 86 million metric tons of wheat this season, but the estimate could be reduced as harvest wraps up. Russian ag consultancy Sovicon is projecting the crop at 83.3 million metric tons. On Monday night, Russia launched a missile attack that hit energy infrastructure in northern Ukraine. Russia also launched a drone attack that caused a large fire in western Ukraine.
The wheat market seems just totally immune to any friendly headline, like it will rally for no reason. So we had maybe some friendly stuff with regard to crop estimates. You got escalation in the war. We've also got a spring wheat crop in the United States that may have gone backwards slightly as a result of heavy rains, yet wheat futures are still sitting at the bottom of the barrel, just doing nothing here. I wonder if eventually this Russia thing and the war, I wonder if eventually it could turn into like a boy who cried wolf situation, and they've ignored the headlines for so long. Maybe you'll eventually get one that is a real deal that disrupts trade flows. We're not there yet, but it could happen.
USDA reported multiple flash sales of soybeans on Tuesday. U.S. exporters sold 5 million bushels of beans to China for delivery during the 24-25 marketing year, and soybeans also sold 9 million bushels of soybeans to Mexico for delivery during the 24-25 marketing year.
This is routine business that you need to see this time of year if you're going to have any shot at all at hitting USDA projections. So we're still not seeing the sort of numbers that I would like to see in terms of the quantities. I mean, these are small amounts. We need to see bigger amounts, but I'm happy to see more frequent flash sales. It's a start, and we are competitive. U.S. beans out of the Gulf and out of the PNW are competitive on the export market. Same thing with corn. So we should start to see some more sales. I just like to see better quantities.
The US dollar fell to its lowest level since the beginning of the year on Tuesday. The decline is due to investors anticipating a rate cut from the Federal Reserve next month and because economic concerns have eased since massive sell-offs on Wall Street earlier this month. Over the first half of the year, the dollar rose by 4.4% due to a surprisingly robust U.S. economy. Since early July, the euro has risen 3.6% against the dollar, while the yen has increased over 7% against the dollar in the last month. Strong retail sales data last week now has the market pricing in 3 or 4 quarter-point rate cuts before the end of the year.
So a weak dollar is supposed to be bullish commodities, but it has not been. The Bloomberg Commodity Index has been soft as of late. Grain markets have been soft. The cattle market's fallen apart. The crude oil market looks like it's struggling here. So even though the dollar's been soft, that correlation since COVID has been totally busted. I mean, we saw the dollar and commodities rally simultaneously post COVID, and now it's like we've kind of weak simultaneously. It's all backwards, and that it goes back to COVID and how screwed up everything is following that. What did cattle prices do yesterday?
Feeders were down 372 to 477 lower. Absolutely terrible. Live cattle were down $1.77 to 342 lower. Box beef was mostly unchanged yesterday. Choice ended the day at 315.08. That was down 47 cents. And select ended the day at 301.04. That was down 97 cents.
U.S. dollars about flat. Stocks are marginally higher. Bonds are flat. Crude oil is up 27 cents. In the November WTI 72.72. Have a great day, guys. We'll talk to you on Thursday.